Hello and welcome to the Market Outlook webinar. I'm David Jones and I do this every Wednesday lunchtime in conjunction with Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday the 7th of December at 12:30 in the afternoon. Let me just pop the risk warning up while I'm talking to make sure everyone can see that. I haven't done this for a couple of weeks. I've been away in Wales just with some family stuff, and I've not traded for a couple of weeks, but did a fair bit before that. So I've just spent the last couple of days sort of catching up where everything is, and I think there's some interesting stuff to look at, because I think particularly in FX, well, actually, and indices as well, we've seen some big levels hit and hold. Some of the levels we've been looking at, like euro dollar, which we'll look at in a second, over the last sort of week or so. So I think it could all mean we may well have something of an interesting end to the year. I've got quite a few markets to go through today, and what I thought I'd do to make things a bit different, rather than going through all of the FX markets and all the indices, I thought that we'll mix it up a little bit and look at a little bit of everything as we go along. But to start off, we'll start off with FX, because I think the euro dollar is interesting. So let me just flip over. So I'm using this is Aondo's Trade Hub software. If you can hear that noise in the background, my office backs onto a restaurant, and I think they're just sorting out their recycling for the week. So apologies for that. I'll be gone in a second. This is euro dollar. I think I've been talking about these big levels for a while. Let me just highlight them. I must admit, I didn't expect the market to actually get down here, but last year we saw what was arguably something of a basing pattern for euro dollar. After 2014, it spent much of 2014 in decline, and then much of 2015 not really doing very much at all. Am I clicking the right line here? Horizontal high and low, that's what I want. So much of 2015 not really doing much at all. And then we've had clearly, some strength for the first half of this year, but it couldn't break through those old highs from August last year. And lo and behold, over the last couple of weeks, we've come back down to these levels. And I think these are, really important levels down here on euro dollar. The old lows for last year ahead of 104, and it does look so far as if these have held. So, assuming what we've seen in the last couple of weeks or so is another retest of these old lows, then the expectation would be for some of the pessimism now for the euro against the dollar to disappear, and for the euro to stage some sort of recovery, back up to maybe this 112, 114 zone. So I think it's an interesting one. So for me, it's held. We've had a couple of goes down at these levels, and you've seen the buyers have come back out, and we've seen the euro push back up. Let's flip it over to the hourly. So for me, I would definitely be inclined to be a buyer. I must admit, I hate moves like this, because when it moves sharply, it means if I want to be a buyer, I need it back down here. So for me, there probably isn't a trade at the moment, but if we saw it drift back off, I don't know, below 106, maybe down to this sort of area here, for me, it starts to look like a buying opportunity, looking for a push back up to 108, and then maybe even higher. But I think for me, the important chart for euro dollar is that daily one. The fact that we have held these levels from 2015, these important lows, I think, from 2015. So I think I would expect the story for euro dollar over the weeks and the months ahead to go back and push back into this range that we spent much of 2016 in. So I think it's interesting. So for me, it's definitely a buy on weakness, euro dollar. Let's do one more FX, then we'll flip over to some of the indices, because there's some interesting stuff going on there. So this is euro sterling, similar sort of move, I think. Obviously different trends and everything because of the EU referendum vote, but considering the weakness that we'd seen from this 90 area on the euro against the pounds, we've seen it drift back, and you can see just how important, since the Brexit surge, the EU referendum surge, how important the whole 82 to 84 zone has been. Yeah, you can see that was clearly the vote. Market euro moves higher, faffs around a little bit, comes back, pushes higher again to 92. That's a steep sell-off. That's what an 800, 900 point sell-off we've seen from those highs in October. But once again, as with that euro dollar chart, we're seeing some euro strength come in. So for me, the euro sterling trade, it's different to euro dollar, but it's the same sort of mentality. The weakness we've seen in the euro against the pound, for me, looks to be over. We may be early days. You could still argue that trend is still down, but this is such an important area ahead of 82, 82.50. I'd still be inclined to be a buyer down here. I suppose there is the argument, if we looked on the hourlies, there's the argument, to sit on our hands for a bit more. If we wanted to, we could draw, I suppose, our little trend line on here. I really do need to get a decent mouse because my mouse is far too wobbly. So we could argue the trend there is still down. So for the patient euro sterling buyer, there's maybe not a hurry to buy it just yet. We'd want to see that trend cracked. But for me, any weakness towards the 82, 83 area, because it has been such good support in the past, looks to be another opportunity to buy again. So I think euro sterling, euro dollar, the weeks ahead, I'll be looking for buying opportunities. Let's flip away for FX just for a second, then we'll come back to it. It's been, as I say, I've not really watched stuff in the last couple of weeks because I've been sorting something else out. But coming back, it's interesting to see how these levels have held, and we've seen similar moves. This is the FTSE 100s. You could argue that stock markets have been pretty dull over the last few weeks from a UK point of view, at least. But the levels, the sort of the post-Trump US election level low is still in, ahead of 65. And you can see just again how these old post-EU referendum levels have held. So if I plonk a line through here, how important that 6,600 level has been. And again, I've mentioned this a few times in the past. The market, it's a long way away from that now. We're 270 points away from that big support level. But it shows yet again how, when was it? End of last week, we came back down, dipping down towards 66.70. Sentiment changed and the buyers came back in. So for me, again, I'd expect a retest through or a move back above to have a look at these highs, above 7,100. So for me, any weakness in the FTSE back towards these sort of areas looks like something of a buying opportunity. So it's interesting that these big levels, despite maybe some of the volatility we've had in recent weeks, have continued to hold. Now I'm going to go a little bit off piste now and look at something different, something we haven't looked at before. This is something that I traded quite a bit before I went away, and it's the bund. I'm sure plenty of you are familiar with the bund. We don't have an enormous amount of data because we're just on the new contract for the bund, but it's the German bonds. Okay, it's the German government bond, and it's an interesting market. I think bonds. For Europe it's the bund. For the UK it's gilts. For the US it's US Treasury bonds. These are widely traded markets, but they don't have much of a following amongst sort of retail traders like me and you, but they really are quite technical markets. So I was trading. I probably did 2 or 3 trades on this in the middle of November during 1 week, and it's quite obedient when it comes to big levels, which is it's exactly the sort of thing that I'm looking for. The reason I look to trade off big levels, it's not rocket science. I'm looking for somewhere logical to put my stop loss. So for me, we saw the bund beginning of December. This is the March contract. It sold off from 163.80 down to 161.10, so a 270-point move. Rallied back, good 150 points, and then over the course of the last couple of days, had drifted back down. But once again, you can see the move early this morning. I think the bund opens about 8 o'clock in the morning. The move early this morning, we come back yesterday to within 20 points or so of these lows. These are the hourly candles, 30-minute candles that we're looking at now. We had a little push down, rejected that level, and the market's rallied about 60 points. So I think if maybe now and again you get a bit tired of the volatility of FX and maybe some of the dullness in stock markets, and you're looking for something else to trade and you've never looked at bonds, I'd say something like the bonds, personally I find it a good market to trade in terms of trends and levels and relatively tight spreads, all of that sort of thing. But I think it's interesting that once again these old lows in the bonds have held. So for me, if I was looking at this tomorrow when it came back down, I'd be looking to be a buyer again with a stop loss under these recent lows. So I thought I'd sort of throw that one in because it's something I've been doing a bit with in recent weeks. Let's go back to the forex though, to the forex markets. Aussie dollar. We're going to have a look now at the Australian dollar, US dollar, and the New Zealand dollar, US dollar. These are a couple of old favourites from the webinars this year. It's been something of I think, a choppy picture in recent weeks for Aussie dollar, US dollar. You know, we had, if I take it back to the really big picture, I think this is a chart we've looked at a few times on the weeklies, and it's sort of, it was always a bit sort of humming and hawing as to whether or not it was breaking out of its trend. So we'd had this trend that had been in place for a while. We had these big levels, the trend line coming in here, so big levels around about 78, and it had a real go at it earlier in the year, but never really looked that convincing, I suppose, in recent weeks, Aussie dollar, US dollar. And it's got knocked back a little bit, but again, if we flip it over to the dailies, we have seen, I think, some of these bigger levels from September hold, but we've still got plenty of good supports going back to the summer around about 73. You know, 73 was tested, and since we saw that level tested, we are, I think, seeing it building and maybe gearing for another push higher. So for me, if I was trading Aussie dollar at the moment, I'd be tempted to be looking to buy the dips and looking for a move ultimately, you know, back up to this sort of 77.50, 78.50 previous highs. But let's have a look on the hourlies and see what makes sense, see if there is a trade potentially there. So that was the move down mid-November. We saw the rally off there, so a rally from 73.20 up to about 7,500, so almost a couple of hundred points. The market's been knocked back a bit, but still seems to find support. So I suppose for me, if I was a buyer now, probably the closest I would want my stop would be below these, I reckon, these old lows. So 73.60. So the market's currently 74.55. So ideally, maybe we get a little bit of weakness and I get in at a better level. But for me, I'd be looking to treat any weakness in Aussie dollar, US dollar as a buying opportunity. And I'd probably only ultimately throw in the towel on the bullish view if we took out these old November lows, so the lows from down here at 73.10. So I think it's an interesting one. After that plunge, that sort of fairly steady slide from those highs, I do wonder, is it getting ready to have another go, another push back up here? So for me, while these levels hold, I'll be looking for a move back up to here. So I think with a lot of things at the moment, because these big levels have been tested, I haven't seen any immediate opportunities for today, but I think there's plenty to keep an eye on for the days ahead, and that for me is one of them. Aussie dollar, US dollar, looking to be a buyer. Let's take a look at New Zealand dollar, US dollar. It's a similar sort of story. I mean, the trend in this one, I think we picked up on it in the summer, and since then the trend has reversed a little bit. But the trend in this one, let's just pick it up from those lows earlier this year. So Aussie dollar, not Aussie dollar, New Zealand dollar, US dollar. So that bit of the trend is still intact, but it's a long way away from there. And then that bit of the trend is the bit that's come under some pressure. There we go. So we did have from January this year this succession of higher highs and higher lows. It's clearly run out of steam, but for me, even though I'll plonk a trend line on the chart, I don't necessarily religiously stick to the trend line. I'll use it for an idea of clearly which way the trend is and which way I should be trading. But for me, as long as the previous major levels hold, even if the trend line's giving it up, that trend is still intact. So for me, for example, this old low here, 69.50, was an important one. On the way up, you know, New Zealand dollar, US dollar messed around in these levels, but ultimately 69.50 held. So again, a bit like the Aussie, I think we've seen it come off fairly sharply in recent weeks, but a big level has held. We've seen it claw its way back over the last 2 weeks or so. So maybe now we're going to have another go at those previous highs for the summer. So there's the hourly charts. So again, I suppose it's all about how aggressive you want to be with your stop losses. The ideal setup for me, I don't know, would be a bit of weakness down to here and a stop loss somewhere the other side of 70.40. But I think with these markets, I do think the Aussie dollar, New Zealand dollar, I do think we're going to see a squeeze. I'm expecting a squeeze back up to those previous highs, so that there could well be some opportunities in there. What should we do? Let's have a look at the DAX. Let's flip back to a stock market. So we'll do the German 30, the DAX. German 30, this is just this morning or just the last couple of days. It's pushed out to, is it fresh highs for the year? Just about. Let's have a look. There we go. It looks like, yeah, just about fresh highs for 2016. Clearly, it's a bullish sign. If a market breaks the fresh highs, it does suggest there's a fair bit of momentum around that. And you can see just how well, since the summer, this 10,850 level has been a ceiling for the DAX most of the time. You can see it there. So whenever the market would have a go up here, the buyers would run out of confidence, the sellers would come back in, and the DAX would get pushed back down again. But not today. So it's an interesting move today. It's a classic breakout, the first step maybe of a breakout out of a fairly significant 3.5 month sideways range. So for me, the default position would be to look to be a buyer of the DAX. Let's see how it finishes off today. But already we're a good 130 points above those previous highs. That looks like a half decent breakout to me. So there's the move. Up. The previous highs were just in here somewhere. So again, the opportunity is, I'm always loath to chase breakouts when the market starts moving, but the opportunity for me would be if we saw maybe a day or two of sell-off, then some stability, look to buy with a stop under maybe the previous day's low, and look for the market to take off again, and maybe have a look at 11,000 ultimately. But it's quite an interesting one, I think, the DAX, because of that daily chart, the FTSE isn't doing this, but because the DAX has broken out to what have been pretty important previous highs. So you would expect the DAX to have a go at pushing a little bit higher. Saying all that, there are some obstacles in the way, so let's not get madly bullish on the DAX. Don't get me wrong, I do think it's set to move higher. But we do have, we have these old highs from the end of last year, around about 11,500-ish, this sort of area. But the break today, I'd suggest, is a reasonably significant one, because the market has been capped for so long. This will have changed a lot of people's perception of the DAX. I'd have thought the break today. So that looks pretty bullish. Let's have a look at a couple more FX markets. Let's have a look at, of course, the old favourite, pound against the dollar. I did a trade on this, right, just before I went away, and thinking the market was going to go up. Let me see if I've got it. It was a really logical, well thought out trade. So I was a buyer. Here we go. It would have been here, right? So I was a buyer. I think it was 124.30 or 124.20, 124 something, and I had a stop loss below these old lows. So let me plonk the stop loss on, because these lows were holding the market up. The market pushed higher, come back down, bounced, blah blah blah. Had a stop loss. The level was 123.50. I had a stop loss at 123.35. Get stopped out by a little bit. I'm stopped out anyway. And of course, lo and behold, where's the market now? About 200 points higher than where I bought it from. But it happens, and because I was not really focusing, I was looking at other things. I never really had the opportunity to get back in. But despite me getting stopped out and missing that move, I still think the argument for pound against the dollar to move higher still stands. If you look on the dailies, if I just take that away, you can see the moves we've had. That flash crash thing in October. I think there's been some news on Twitter today. I've not read it properly, but about maybe a panicked trader at Citigroup or something exaggerating the sell-off. I think the news is out there today anyway. But since then we have been building slowly a succession of higher highs and higher lows in the pound against the dollar. Let's have a flick on the hourlies. Let's see how much data we've got on the hourlies. See if we can go back. There we go. That's enough, I think. So if I plonked my lines on, if we went back from this low down here, wherever that one is, and chucked them through there-ish, that'll do. Something like that. You can see we've got our trend in place. So for me, again, it was only it looks like only yesterday, or maybe even only overnight. What's the date today? December the 7th. Yesterday. It's only yesterday. Pound against the dollar made a high for this recovery. So for me, that's still very much in bullish mode. So I'll be looking to be a buyer. And as usual, the only question for me is, well, where's the stop loss going to go? And I suppose one of the tightest levels I'd want to have it will be under these lows here, just before it surged higher. So let's have a quick look. I don't think I'd do this trade, but let's have a look at what that level is. So this is now a 10-minute chart. So the tightest I would want it would be under that level. So if I had to buy it now, I might want to stop somewhere here. Oh, if I could draw the line properly, there we go, horizontal high low. Oh, I'm not doing this very well, am I? Under those lows, I'm just going to guess where they are, 125.60-ish. And the market's 126.13. So I suppose that's not a bad trade. We're coming off the highs from the day before. We've got, you'd expect, quite a few support levels down here. Let me have a look at those. So I suppose you could say that's, for me, is at the moment, the ultimate short-term support level in there. And then we've got, another short-term support level just sitting on 125.70. So 125.70 is the first one. That's held so far. And then whatever that level is. Do I keep clicking the wrong thing here? Oh, I can't be bothered. Okay, so we've got 125.50 to 125.70 support, and the market's at 126.13. So actually, out of all the charts we've seen so far today, if someone put a gun to my head and maybe do a trade, this would probably be the trade I'd do. So I'd be a buyer at 126.14 with the stop loss under those levels. Regardless of that, though, I do still think, based on the dailies and the hourlies, I'd be expecting pound against the dollar to move higher from here and maybe go back up to target the 128 level. It's only if we start to lose and fall out of that trend that has been in place for a while that I'd start to think, well, maybe it's running out of steam yet again. But I would be, I think, mildly bullish pound against the dollar from these sort of levels. Let's have a look at what else should we look at next? Let's have a look at some of the US markets. Now the Dow. Let's look at the Dow first of all. Where are we? Let me find the Dow. I think was it only a couple of days ago the Dow hit fresh all-time highs again. Let me just plonk that up. There we go. All right. If we flip it over to, there we go. Oh, it looks like it's even doing it now. It's doing it this week, isn't it? Let's flip it over to the daily. So here's the Dow. So we have had, some crazy moves clearly on the Trump win back on the 9th of November. But the market has clawed its way higher. It's definitely not a market I'd want to be short of for long at the moment, regardless of how you think, how ridiculous or not you may think that the market is up here. As the old saying goes, the market can stay irrational longer than you can stay solvent. So for me, the approach would definitely be to look to be a buyer. We've had some fairly, I suppose, tight ranges over recent days. I think yesterday it was only up, but it was only up 0.2% or something like that. You could argue, it's well overbought up here. If you're looking at an RSI, this is the most overbought the market has been. Well, that chart goes back. It's the most overbought it's been since here, November 2014. So what I'm doing, I'm looking at how long the RSI has spent in the overbought zone. And it's going back to there. Actually, it looks pretty similar, I suppose, doesn't it? We have this. It's like back in 2014, it was clawing its way higher, but doing it almost inch by inch, and we're doing the same thing again now. So, but regardless of that, the trend is still up. The trade, I suppose, the trade I would do. I think when the ranges are as tight as that, we're back to looking, at a couple of my old favourites. The previous day's high and low. We've got, I think, for the really short-term traders, some really good obvious levels. Let's have a quick look here. So if we go, what's that? December the 5th. So that was a couple of days ago, 7:30 in the evening, the market came down to 19,180. And then yesterday, the magic of the big level, the magic of the previous day's high and low. That was a great trade yesterday. If only we had a time machine to go back to 3:10 yesterday and buy it. But you can see the market came back down to the previous low. I think, I suppose for the RSI, for the squiggly line fans, the market was oversold as well. But you can see how well that worked in terms of a trading setup. There's no way of knowing it was going to hold. But if you're a buyer at 19,200 with a stop somewhere the other side of the low, it's a pretty tight stop. Let's say you were 19,1, I don't know, 19,170 for the stop, 19,200, 19,205 as a buyer. You've got maybe a 35-point stop loss, and the market ended up rallying. It's only rallied, what, 60 or 70 points, I suppose. It's been a fairly tight range, but it's a good entry point. So for me, the big level to watch for today's session, is if we see it take a trip back down to the low 19,200s. I mean, it's been a tight range anyway. It's trading at 19,239 now. But if we saw weakness down here and another bounce, then that would potentially be a trading buy down there. So that's the Dow. You can't argue with this trend. Well, you can argue with this trend, but in my experience, arguing with trends is expensive. So someone saying the market outlook you're doing now is based on trend analysis as opposed to forecast analysis. Exactly. So what are we looking at? Previous trends in the markets, trends reversing, that sort of thing. So I'm not taking a view that I think the Dow should be at 19,397 based on some numbers. I'm taking a view based on what the market's been doing. Let's look at the S&P. The broader US stock market. Obviously, it's a similar sort of pattern. These are the daily charts we're looking at. There we have the Trump craziness, the election results. The market has pushed higher. Then, towards the end of November, started coming off, but has bounced back. And I think, once again on the S&P, if we look at it maybe at a different time scale to the Dow, there are some interesting levels to watch for the next couple of days. You could see in the last week of November what a problem the sort of 22.15-ish area was. The market's currently 22.10. It'd be interesting to see in the next couple of days, can it break through 22.15? And again, if we saw the S&P break 22.15, we'd probably expect another move higher, like the breakout we've seen in the DAX today. I suppose if you really wanted to go short, then now's the place to go short, because you've got a logical place for your stop loss on the S&P, up at, there you go, that level there, that'll do, 2214.6. And if the market breaks, then you want to be out. Personally, I wouldn't be going short yet, because it's only yesterday the market made a new high for this move up. It's made another new high slightly overnight. So if you really want to go short, personally, I'd rather sit on my hands and wait. But let's see. I think that's an obvious level to keep an eye on. And as with the Dow, there are obvious, big levels of support being left in recent days, and this one from the 2nd of December. So US stock market still very much of a bullish bias, even though it's been a relatively quiet few days, I think. We've got just a couple more FX markets to do, then we'll come back and have a look at the price of gold, because the price of gold is finally forcing me to throw in my towel on my view. But first of all, let's look at the dollar, Canadian dollar. I made a note before saying, look at this because it's interesting. I'm just trying to decide why that was. I suppose it's the trend, actually. We've seen this recovery in the dollar versus the Canadian dollar since May this year. So it's a 6-month recovery. If we plonk our little trend line on, let's take a look. Take a look at this market. Look at that. So we've got a little trend chugging away on the dollar against the Canadian dollar. The market has sold off a little bit, but as we know from following trends, no market moves in a straight line forever. So for me, assuming that trend's going to hold, the expectation would be for the market to hook its way back up and have a look at 136 again, up at these sort of levels. So I'd be bullish. This is, I think, the only chart I've seen so far where I'd be bullish on the dollar. So bullish on the dollar, bearish on the Canadian dollar. So it's interesting down here. I think there are a few things you could do. An aggressive trade, which isn't one I would do, but an aggressive trade would be to buy it now. So we're 132.82 with a stop loss underneath this low from a couple of days ago. If you really wanted to, if you really thought the market was on the turn, that's the aggressive trade. It's not necessarily one I would do. I would rather have my stop loss the other side of these levels down here, because these are, once again, these look like big levels. 130. You can see how well it held the price up, dead on 130 during September. So for me, if I could buy it, well, let's say it drifted off to 131, and my stop loss could go in at 129.70. So I've got 130 points risk, but then 500 points potential upside. That looks like a great trade. So I'd rather buy it a bit cheaper than it is now. But the risk there, of course, is if the market surges, you miss the trade. But I think Canadian dollar is interesting because that trend is up. We've come off the highs. We're looking like we're stabilizing. All things being equal, you'd expect that trend to resume at some point, whether it's from today or whether it's from the next few days a bit lower down, and target a move back to 136. So I think it's interesting one up here. And the last currency pair we look at is the old favourite, dollar yen, which has gone like an absolute maniac in the last 6 weeks or so. So I've not traded that, I don't think, since I've been doing these webinars. But we were looking at this, I remember looking at this way back in June. And this is a weekly chart we're looking at. And I was saying that the battle seemed to be, well, was this trend coming to an end? And we needed a bit more confirmation, blah, 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 blah. And we see it sort of bang off the 100 level and holds. But I remember saying the big test is, can we crack these previous highs? We are 600 points through those previous highs in dollar yen, and still going up. As of yesterday, still going up. So for me, despite being a trend follower, I do still have a problem buying into runaway trends like that if I'm not in already. But for me, you'd want to be a buyer, and as usual, the question is, where's your stop go? For me, the ideal place for a stop would be below these November 28 lows, but that's 300 points away from where we are now. It's probably a bit too far for most people. It's a bit too far for me. But I think for me, if we got a significant correction in dollar yen from back here, it looks like a buying opportunity, and you can't really argue with a chart with a trend that looks like that. It looks like it has definitely reversed any remnants of a downtrend that were left from the end of last year, beginning of this. So the only question now is, it is looking very overbought, and there's a bit of this bearish divergence thing going on the squiggles on the RSI at the bottom, where the market's pushed higher, pushed a bit higher, but the RSI is making lower highs. So it's often a half decent suggestion that maybe, it's a market that could well be running out of steam in the short term at least. So let's see what happens. But for me, I definitely want to be a buyer of dollar yen on the dips. And the final one, I would normally look at oil, but I think if you attend these ones regularly, you'll know how much I hate the price of oil. It's just faffing around $52. I still think it's bullish, but I think it's just, for me, it's a bit of a crazy market to trade. I don't know how much data we've got, so we'll have a look at gold. I have been bullish on gold. I think all this year, because the market going back. Let's go back a bit. The story for gold in recent years has been of declining prices. It peaked in 2011. Where was it? About $1,900, something like that, an ounce. And then every year since then, nearly, it's made a fresh low. But this year, we saw a sustainable rally. We saw the price of gold recovering. And I remember saying a couple of weeks ago, I'd still be bullish on the price of gold, but if it breaks 1,200, I'll have to throw in the towel. Well, that is what it's done. So I think at the moment it is difficult for me to have a bullish argument on gold, because these big old levels from earlier in May have gone. That doesn't mean I think that the major downtrend for gold is going to continue. I still struggle to believe that gold is going to take out the lows from last year and we're going to be sub 1,000 again. So I'd still be at the moment looking for this weakness to end and maybe sentiment to start turning around and the buyers to come back in. But at the moment I'd definitely be sitting on my hands and I've thrown in the towel for a bit. But I still think, famous last words, we'll see $1,500 before we see $900 on gold. But let's see. Maybe that's a sentence that'll come back to haunt me next year. Let's see what happens. But I think we had lots of support back here. We saw a strong move. That move has really run out of steam in recent weeks. But I think, well, let's see what happens. I'd expect a bit of strength to come back in again over the weeks ahead. But we'll keep coming back to it and see where we are. So that's it really. So to recap, it's been quite a big couple of weeks because we've seen big levels tested. Euro dollar is really the big one. Those lows from the end of last year, or last year, sorry, that's sort of the 105 levels. They've been tested and they've held. So that does suggest, well, okay, bang, we're going to go back up again towards the highs of the year, towards the top of the range. So I think that's a really interesting one. Pound against the dollar, because it does have, clearly it's a long way off those Brexit highs, but it does have something of a trend going on in recent weeks, despite me getting stopped out a few weeks ago. We do have something of a recovery trend going on, so I think pound against the dollar is interesting. DAX, because just today, and the German stock market, wherever it's gone, the German 30, we were breaking out through what has been a real problem area in the past on the DAX, and we're through that now. The top of that range is well and truly broken, so that's really an interesting one. And US stock markets, because despite it being a little bit quiet, these are markets. Oh, it's coming off a little bit. It'll be interesting to see if these levels hold from earlier in the week. These are markets that do still seem to have plenty of bullish momentum behind them. So nothing immediate, I don't think. And maybe that pound one is an interesting one to keep an eye on in the next couple of days. But with these big levels holding, I do think it does lead us to some maybe interesting weeks and months ahead. Okay. And that's it. And let's forget about gold for now. We'll come back to gold when it starts to turn the corner. So I'm going to start wrapping things up there. God, I've gone on a bit today. 35 minutes today. So we're normally done in half an hour on these things. So I'll start wrapping things up. If you've got any questions after this, feel free to drop me an email. My email address is david@tradeafter.com. I do some stuff with Aondo on social trading. Their social trading offering is really interesting, and it's something I've got more and more into this year. So I've written some stuff on social trading, where you follow other traders. And if you go to that website, tradeafter.com, there's some information on there. And I did one last night, a social trading webinar. We do those normally a couple of times a month, and these market outlook webinars every week. So we'll be back next week at 12:30 to do it all again. You can follow me on Twitter @JonesMarkets, but for now we'll wrap things up, and I hope you have a good week and you don't have any awful trades and the market goes your way, and we'll do it all again next Wednesday. Thanks very much.